Here is a scenario that might apply to you. If you're a company operating a business and you make $400,000, pay yourself a salary and wage of $80,000 and super included, and then leave the remaining balance under the company to take advantage of the lower tax rate. Is this a tax minimization strategy that the ATO allows? Or is it a massive ATO red flag? The ATO released a practical compliance guidance, PCG 225-25. This compliance guidelines talks about this situation. If you operate through a company and think that passing the PSB test means that you can freely retain the profits or split income, this is now worth checking carefully. The key point is this: even if your company or trust qualifies as a PSB, personal service business, the income can still retain its character as a PSI. So the question is no longer, did we pass the PSI test? We also need to now consider the question, what happened to the net PSI? And the treatment, is it a reasonable or a genuine commercial reason to treat it like that? Here are the 3 practical checks that we need to make. First, was the person who actually performed the work paid appropriately for the value of their services? Underpaying that person while the profits are retained under the company or elsewhere can be considered high risk. Second, were payments made to family members or associates genuinely linked to work performed and commercially reasonable? Payments that do not match the actual services may create risk. Third, if the profits remain under the business, stayed inside the company, was there or is there a clear commercially business reason, such as using the funds for working capital, paying upcoming liabilities, purchasing equipment to grow the business, paying staff, planning an expansion, or minimizing cash flow risks? The documentation matters. Keep records why the company exists, how remuneration was calculated for family members, associates of family members, and other employees, and why profits were retained, and what evidence supports this decision. Before assuming the company gives you a tax flexibility or minimization option, keep this checklist or speak to your advisor, as it is not the case under the new PCG 2025-25.